important. So by now, you understand the government has passed the CARE Act. And today, I'm going to talk to you a little bit about how this can affect you and what opportunities you may have. So number one of the big things that I would think is as exciting as the stimulus part of the CARE Act is the fact that the government has made adjustments to student loans. And what I mean by adjustments is that number one, there will be no interest for 6 months. Number two, if you have federal loans, and all of this is applied to federal loans, you won't have to make a payment until September 3rd. And then number three about STEP student loans. If you're on a forgiveness plan, those payments that you miss still actually count towards your total number for forgiveness. This can actually be huge for a couple reasons. If you're still constantly working and you're not thinking that your job, or there's not been any information that your job is really in jeopardy, this can be an opportunity for where you can take money and reapply it to maybe have a little bit more cash on hand to stabilize your situation. Or maybe you can actually pay off a debt or two. But 6 months is a long time, and this is a tremendous opportunity. So the second thing that the CARE Act has done is it has helped the unemployment. Meaning unemployment is typically a statewide thing. But what the federal act has done is it, number one, opens it to a whole lot more people. So a lot more people can apply for benefits. Number two, they're taking back that whole waiting period. So you don't have to wait a week to apply for unemployment. And then number three, they're actually giving out a $600 bonus. And last I checked, it should last about 4 weeks. This can help tremendously as typically unemployment is paid weekly. And those extra funds can help you through this time of trouble. Again, if you're able to get unemployment and you're getting it consistently when you're filing, and then you don't have to make your student loan payment, just really think about how well you can stabilize your situation. The next thing I want to talk to you about is the 401k provision. Now, by now, you understand that I really don't want you to pull out your 401k. But I do understand being out of work for a long time and not being able to get back to work or having trouble getting back to work. Everybody's situation won't call for immediate response when it comes back to employment. So I would encourage you, if you're really into hard times, meaning you're about to lose your home or something of that devastating nature throughout this time, go ahead and pull out your 401k. It's not the best solution. It is by far, I will say, the last resort. But I do understand this circumstance could come up over this unknown period of devastation. But what the CARE Act does allow, if you're gonna pull out your 401k, number one, you will not be charged that 10% penalty. You will still have to pay taxes, but you won't have to be charged that 10% penalty. Additionally, in order to put that money back, you now have 3 years to put that money back instead of 1 year. And then lastly, you can actually pull up to $100,000 instead of the $50,000. Again, I really don't recommend using this option, but I do understand that given the circumstances, this may come up. Now, lastly, the stimulus. Majority of Americans and majority of you may be receiving some form of payment. The good thing about this payment is it's a credit for you, and it's based off your 2019 taxes, or if you haven't filed yet, your 2018 taxes. So that will be the information that the government will be using to send you the money. If you make $75,000 a year or less, you will have qualified for the full $1,200. So again, really think about if you're able to get a $1,200 stimulus and based off the information from your employment, you don't see your job going away anytime soon, you're able to work through this pandemic, and you're able to kind of put your student loan payment on pause. Just think about how much progress you could actually make on your debt payment. Just think about how much cash you could kind of set aside to kind of stabilize your emotions and your family throughout this time. It's a really, really great opportunity. Now, without getting too specific, the $75,000 will be adjusted all the way up. The payment will be adjusted all the way up until you reach $99,000. And if you're married filing jointly, you really just double those numbers. So I know all this information can be complicated, but I've left a really concise picture in the description below. So go ahead and check that out. And on your way, give a thumbs up if you've stayed this far in the video. I hope this information is helpful.